All right, hello, everybody. I'm joined here today by my guest Anubhav Jain of Rupify, and the topic today is embedded lending, the next disruption. And our tagline for the show is how every company is embedding financial products in their processes to stay relevant. My guest Anubhav is the founder of Rupify, which is India's first embedded lending fintech for SMEs. He has built consumer lending and edtech businesses in the past, and with successful exits from both. He is an expert in credit risk, lending, analytics, and underwriting. So welcome to the show, Anubhav.
Thanks, Jim. Really excited to be there.
Awesome. Well, let's jump right into it. And first of all, I appreciate you being here. I know it's pushing 11 p.m. in India, so thank you for joining. I'm sure everybody will bear with you if you get a little sleepy. No problem. Let's kick off. We're going to go into your journey as a founder here in a bit, but I first want to start with your current focus, which is Rupify. So I like to do a little bit of research ahead of time, but not too much, because I really want you to explain it to our guests as if they know nothing about it. So would you mind just kind of laying the foundation for what you guys do?
Yeah, sure. So I think leaving the jargon aside and talking about what embedded lending exactly is and how we're going about it. So I'll actually go back a year and talk about how we started it and what's the story behind Rupify. That
Great.
should probably give more idea and give more context. So this is late 2018. We were sitting and we were brainstorming, and I had just exited from my previous startup that got acquired. So we were partying and we were thinking about what we wanted to do next. So, and I had this idea in my mind that I wanted to work for small businesses, because I came from a family which was what you call a middle class family, and we've not seen anybody build a business in my family, but I had seen my friends coming from business class societies and seen their struggles as well as seen their successes. So it kind of always excited me that how small businesses work and go through different cycles. And when I did some research, I started doing a lot of conversations with people. I met my current co-founders, and it's a crazy story. So I actually was having a chat with somebody on LinkedIn, and that's where we decided that, hey, we both think alike, and let's do something together. But none of us.
So how did you find each other on LinkedIn? Was it like you're commenting on each other's posts, or how did you?
Yeah, it was a friend who tagged my co-founder Ankit on one of my posts, and
That's so funny.
It is. I mean,
it's like we have online dating and then online business partnerships. Like, swipe left if you want to be my business partner?
Yeah, but I think LinkedIn has been very powerful for us.
That's great.
For a lot of things, and this is something I would give to them. So we started, as you call it, kind of founder dating. So we started chatting and we looked at the small business space. So Ankit also had a background there. I also wanted to do something, but we had no clue what we were going after. So we spent an year talking to a lot of small businesses and trying to understand what their pain areas are, what their problems are, where do they struggle. And when you look at India, there are 60 million plus small businesses, right?
Oh, gosh.
And that's a very, very large number. But almost 85% of them still don't transact digitally, or they don't have access to any financial product. So
wow, that's a huge opportunity then.
Yeah, it's huge. I mean, in terms of financial products, in terms of financial inclusion, they are still used to using either cash as a mode of payment, or they will use traditional methods where they will write a check, they'll give it to somebody, wait for like a week for the payment to get cleared, and then everything is reconciled in manual books, right?
I see.
They don't have any accounting software, they don't have any taxation people who can help them with all of that. So from a financial system, they are completely aloof. And that's where we thought that, hey, we will have to build something when it comes to financial products for them. But as we started going deeper, and we are talking about long tail, we are talking about this real small business here.
Okay.
to give you some idea, it's basically a small business that I'm talking about is someone who has a turnover of less than $100,000 annually, right?
Okay.
So they make some very small money for themselves, which is sufficient for them to just survive. And it is very important for them to grow their business so that they can also increase their lifestyle, but that's not happening. And the reason that's not happening is because they don't have access to formal credit. So that is the you know outcome that came out of our research. We clearly realized that credit needs to be solved first. That's at the core of small businesses when it comes to their access to financial products. And then when we started looking at credit and lending, what we could see is that, hey, credit can be solved in multiple ways. You can become a bank or an NBFC yourself, a non-banking financial institution, uh, or you can work with an existing financial institution and try and solve it, which is very painful because
Imagine.
all banks and all non-bank institutions have legacy systems and they still use very traditional approaches to extend any kind of loans or credit products. And when you talk about these small businesses, the data does not exist. The biggest challenge was because they're transacting in cash, they don't have any financial statement. They don't
Right.
have any balance sheet, right? So how do you underwrite them? And that's where we decided that, hey, we need to not go to these businesses in the traditional way, but look at other systems and products that they use and try and partner with those companies and embed ourselves inside their system, right? So to take an example, if there is a small business who's constantly buying from a distributor, right? Why don't we go to that distributor and access thousands of small businesses through them
Yeah.
and ask that distributor that, hey, can you tell me for the last 12 months, what is the historical purchase data about every business that you work with, right? That's one way of using data, which is not coming from your core customer directly, but coming through the value chain, one level up, right? Similarly, you
Makes
can
sense.
go to an Intuit or a QuickBooks and tell them that, hey, we see that you've been used by some of the businesses to manage their accounting and other purposes. Uh, can we tie up with you? And wherever there is a version of QuickBooks or Intuit that's being used, can I go and offer some credit using the data that you already have, right? So instead of reaching out to every small business directly and trying to acquire them, we will go through some other channel, which is not necessarily a financial product, right? It can be anything. It can be a marketing product. It can be as simple as Google Ads, right? So let's say there are small businesses who use Google Ads for getting customers, for marketing themselves, right?
Okay.
Can we tie up with Google Ads and say that if a business is spending $5,000 monthly on Google Ads, we will provide credit to that business so that
So let me pause you for a second, Anubhav. Are you saying that you're utilizing these third parties as kind of a vetting mechanism as well? So you're evaluating the credibility of the small business owner by their performance or reliability or credibility on these other platforms. Is that accurate to say?
it is to an extent, yes.
Okay.
Because when you break down this small business, there are multiple things that they're doing. And we are trying to solve for, let's say, their working capital, their entire credit need. What we
Okay.
thought is instead of solving for it in one go, can we solve for different pieces? So we can solve for their marketing through Google Ads. We can solve for their accounting through a QuickBooks or an Intuit partnership. We can solve for their purchases and inventory through the distributor. We can solve for many other things in different ways. We can solve maybe for payroll through another partner. So what we will do is pick up a use case and go to that large anchor, as we call it, a partner, and through them we will try and reduce our costs. We will acquire the customer through them. We will underwrite using their data, right? So two of the major costs in lending we have kind of reduced. And that is exactly what embedded lending is all about. The word embedded is literally the core of the business here, where you don't go to the customer directly. You reach out to the customer by embedding yourselves in some other journey. And it's so seamless, Jim, that that customer doesn't even know when they suddenly moved from a distributor to Rupify, or from a accounting software to Rupify, or from a
I see.
Google Ads to a Rupify. It's so seamless that
So
it feels
is it
like
literally embedded in the UI of
it is.
wow. Okay. That's
So I'll take an example. Let's say you go and shop on Amazon, right? You select an iPhone, and
okay.
you are buying it on Amazon. But you don't want to pay $1,000 right away. And what we will do is, the moment you go to checkout and you are about to use your credit card or any other payment instrument, we will say, hey, you don't have to spend that money. You will get a buy now, pay later using Rupify, right?
Got it.
So you can now pay $100, get that iPhone delivered to your doorstep, and pay the remaining $900 in 9 equal installments over a period of 9 months, right?
Okay.
So that's seamless, right? Rupify, basically what it will do there is collect data from Amazon of Jim's prior historical purchase
Hmm.
behavior, and then make a call. Should Jim be given an option to buy on credit or not? Right? And it all happens real time. So Jim has not gone to Rupify. He is not applied for a loan at Rupify. He's not searched on the Google or on the internet for Rupify. He's on Amazon, right? Uh, and Amazon actually connects him to Rupify in a completely seamless way. So
Wow.
that's a very simple example of how it works.
Now, what I'm struggling to think of the right word here, but what is not compliance, but like successful payment history, defaults? Like, what have you seen in terms of defaults? I know the business is young, but what are you
Yep.
seeing so far in terms of defaults, and how would that compare to traditional lending?
Yeah, so I think that's a very good question. So the beauty of embedded lending, especially for small businesses, the way we are doing, is that uh, the product itself, the way it's designed, is low risk. And I'll tell you why. Take an example where a small business goes to a bank and says, I need $200,000 of working capital loan.
Hmm.
Now, if a bank gives him that loan, the business will use it for different purposes, right? So the money comes in their bank account, and they will use it for different expenses, right?
Right.
But the bank does not know what the borrower or the small business is going to use this money for. So it's a very kind of a black box for the bank. They
I
are
see.
just evaluating that, will this guy be able to pay me back or not, right? That's the decision they are making. But they don't
Hmm.
know whether he needs 200,000 or not. Why does he need it? What will he
I
use it
see.
for? Those are things that you can't have too much control over. In our use case, because it's embedded, the use case is already defined.
Yeah.
So
Yeah.
if I'm on Google Ads, and if I give you credit for Google Ads, I know you are using it for Google Ads. If I'm on Amazon, then I know you are using it for a purchase on Amazon, and exactly
Uh-huh.
what you're purchasing.
Yeah.
So for small businesses, when we integrate different use cases, we exactly define what is critical to their business, and only those use cases we enable for them. So
Okay.
uh, that really brings down the risk, because we know exactly what's the capital is being used for. So, and it's for business expenses and not for some personal expenses, right? Because when you speak about small businesses, the small business owner and the small business are interchangeably used.
Yeah.
You can't separate the two, right?
Yeah. Of course. Yeah.
Right? So it's very difficult to control that. If the business owner has money in their bank, they may be using it for some personal travel, for some personal expense. Now that travel could be business related, but it may end up being personal.
Yeah.
So that is the kind of boundary we create with this. That's one. Second, what helps us keep the defaults lower is when we go and talk to a partner, we tell them that, hey, if this guy doesn't pay, you are not going to allow him to make a purchase or make a transaction on your platform in the future, right? So
Wow,
that
got it.
is
Okay.
a very strong relationship that we
Yeah.
build, right? So if I'm going to a distributor, I'll tell him that, hey, I'm going to give credit to your retailers, to your customers, but the moment I don't get my money, you block him, you nudge him to make a payment. And the moment that block happens, this guy is like, hey, what's going on? You've
Hmm.
stopped my supply of goods. And invariably, the guy ends up making a payment, right? So those are some kind of embedded lending specific features which reduce the risk of defaults in our model.
I see. Well, that's brilliant. That makes a lot of sense. Now, I'm thinking of adoption by the vendor. So, I mean, you're not selling individually to small business owners, as you've
Yeah.
mentioned. You're doing a one to many. How is
Yeah.
it going on the sales side? Starting these conversations, it seems like a fairly big ask. I can see the win for the
Yeah.
vendors, but it's a pretty big ask to extend trust you for them to embed, Roopify inside their app. Like it's a fairly big ask. How's it
Yes.
going on the sales side?
Yeah, I think so. It is. It's actually a B2B company, right? Because for us, getting that end customer is dependent on getting that partner, right?
Yeah,
So
absolutely.
if we get the large partners, the large vendors to work with us, then we're good. And it's not that easy, right? You said, because we are actually trying to convince someone to embed our systems
Yeah,
inside their transaction.
yeah,
Anything can break any day, right? It's
yeah.
their customer. The biggest point here, Jim, is it's their customer
And their data.
in the first place, right?
Yeah,
Uh, so they're actually putting you in front of their customer. So there has to be a lot of trust that needs to be established. And what I have learned, and this is something that not just applies to Rupify or embedded lending, what I've learned as a founder here is that when it comes to B2B sales, you'll have to do it yourself. So we didn't get anybody in the sales team or in the growth team for the first 6 months. We did all the sales ourselves, right? So every single conversation was done by us. So from that standpoint, the person sitting in front knew that the founder of Rupify is talking to them, right? Even though we were a very small company, it was just 5-7 people, but at least we told them that, hey, you are important to us,
yeah.
right?
Well, and there's that accountability element. I mean, we're very much at the same stage, and
Yes,
and I'll tell people that I'm speaking with, our prospective clients, like, look, I'm right here in Boulder, Colorado. Here's my address. If you're
yeah,
unhappy, you come here and wring my neck. Like my neck is on the line. I need
exactly.
this to work. There's high accountability.
Exactly. And
Hmm.
we did apply this on the other side also. So what we did when we went to some of the largest players, so we actually signed up. DoorDash in the US, right?
Actually, my daughters and I have been doing DoorDash for fun, just to spend time together. So yes, very
Right.
familiar with it.
So there are two companies in India which are exactly like DoorDash, uh,
Okay.
and both are unicorns. Okay, we actually signed up one of them as our first client, right? Our
Wow.
very first client was one of them, and it was not an easy sell. But one thing we were clear: we went directly from founder to founder, right? Uh, it really helps because when you're trying to do a B2B sales, and especially the kind of complex product like ours, where we are talking about integration into their system, we will need the technology team bandwidth, we will need the operational bandwidth, we will
Hmm.
need a lot of processes to be restructured, because you are talking about now a new journey for every customer, right?
Yeah. Yeah.
Especially when
It's
it comes
huge.
to payments, and you can't afford failure rates when it comes to payments and checkout, right?
Yeah.
So because of all that, we had to build trust, and that comes top down, right? So what we did is we made sure through our network, through our friends, through our investors, that we are able to get a connect to the top, right? And I think that really helped. If we were able to convince the founders, we were able to talk to the right teams. I have seen that there are clients where we have spoken for 6 months, but we've not been able to make a sale purely because we're talking to the wrong person. We've not figured out who is the right person we should be speaking to, who handles this product, who understands lending, who understands why a financial product is important for their customer. So from that perspective, our clear learning was, because we are trying to do something new, embedded lending is new in India, we have to go and talk to the right guy.
Let's slow this down a little bit. This is too important to go over quickly, because I think this is a significant struggle for a lot of founders. And so I hear you saying that it sounds like you targeted the client that you were looking to acquire, and then you needed an introduction, right? Like you didn't have direct access to the founder. So was it then a matter of finding someone in your network that can make that introduction?
Yes. I mean, my co-founder Ankit and I, we've been in the startup community for some time. So we knew some people, but what we did is, and this is again a lesson that I've learned, founders should feel no shame in asking for help, right? They should just go out and ask for help. I have seen in the Valley as well, in India as well, there are enough people who will help you out when you are trying to build a company, right? But you have to ask. If you don't ask, nobody knows that you are looking for help, right?
Fair enough. Yeah.
So what we did is we were very clear. We went to some of the large institutional investors who actually did not end up investing in Rupify, but they helped us connect to their portfolio companies, right?
I see.
So those are some interesting channels that we explored. That, hey, if I want to talk to this guy and I don't know the founder, can I talk to their investors? Can I talk to their partners? Can I talk to the law firm that works with them? Can I talk to their chartered accountants and get a connect to the top?
So you're sort of getting closer and closer as you go around, right? Like making different connections and eventually getting to the founder of the company you're trying to target.
Exactly. And once you get that connect, it really helped. I mean, you will get an answer in the first call. You will get a yes or a no. Nobody is going to beat around the bush, because you're talking to the right guy.
Yeah. So so then let's move one step further. So you've now got the conversation that you've been looking for, working for, hoping for with this founder. Now, but it's still, so like, one, they have to get it, right? Like they have to see the value in what you're offering, and they have to be, I would argue, somewhat hungry for it. But then beyond that, there's that trust element. And you have, it sounds like, one shot. So what do you do? Are you leaning on your past experience and credibility, your industry contacts, your reputation over years, or are you establishing credibility based on, your education? Like how does that conversation look?
Sure. So I think it's a mix. And it's, again, comes down to relationship to some extent. If I have a relationship already existing with those people, the credibility comes from who is making the connect, right? So for example, if I'm getting a connect to the founder through their investor, there is some credibility already being built, right? Because an investor will not make a connect if they don't find something useful, right? They'll not just do it because I'm asking for it, right? So there, because everybody talks money here. We are all talking about profits and commercial benefits for everybody. So it's very clear on that front. So that helps. Second, yes, our past experience, our credentials also make a difference. But one thing that has also worked for us is if the trust is somewhere not there because of no common connect or no past experience of working together, we try and convince somebody to do a small pilot, a very low touch, no integration kind of a pilot with us, which does not cost them too much, right? So we will tell them that, hey, let's not expose our engineering teams. Let's not do a deep integration. We are not talking about taking your team's bandwidth here. We just want access to 50 customers, right? Let's see how we do on those 50 customers. And once you've seen that performance, then we will see how this goes, right? Because as much of technology I can show them, as much of a very sexy user interface I build, and very flashy applications I show them, ultimately it's all about whether this thing works or not, right?
Yeah. Yeah.
And that you can only see once you try it out.
Sure.
So we have to give them that comfort.
Yeah. Okay. So it sounds like then in the beginning stages, you're doing, or you and or your business partner doing all the selling. How do you scale from that? There's only one of you. There's limited time. So how do you scale then to bring in a sales team? Is that something you've done, or is that on the horizon?
No, I think that's still on the horizon. So though we have achieved certain scale with these partners, in fact, the Indian DoorDash analogy that I gave you,
Mm-hmm.
that first client that we got, uh, we've actually gone ahead when they were already working with a very large financial technology company. We went in, we scaled ourselves, and now we are their largest partner, right?
Mm.
So we've done that, but I would still say that scale is still a journey for us. What we have been able to do is, wherever we have not been able to get too much scale because we are still very new and early, we've been able to cover for that through a great customer experience,
I see.
right? I think customer experience is a very underrated aspect of a good product company.
Yeah,
There
totally.
are companies who can completely be built on great customer experience. Customer experience can be a moat, right? I think that's something I always talk to investors about. So what we have done is, we've made sure that whether it's 50 customers or 500 customers, or customer experience does not change, it does not get impacted. And that's what we need to maintain when we go from 500 to 5,000 and 5,000 to
Right.
500,000, right? I think that's the
Yeah.
tricky and the challenging part of being a founder, that how do you do things at scale.
Yeah.
uh, so yeah, I think that's what keeps me awake right now.
Let's use that as a segue, actually, because I think that gets into leadership, trust, autonomy. Where do you stand with your level of comfort in letting go of certain processes, certain responsibilities, and knowing when the right time is to do that?
Yeah, that's a good question, and I think I'm also still learning on that front. But what I
I
have
think we
so
will
far,
forever.
yeah, it will go on forever. But what I've learned through my past couple of startups is first thing you have to do is find out from a competency standpoint who can do what, right?
Hmm.
Once you've determined that, you have to give full ownership of that piece to that person, right? So I'll only talk about the founders here. Let's say we are three founders. uh,
Okay.
I come from a financial services background and some experience on the risk side, on underwriting. So there is a bit of a core of what we are doing that I bring to the table. Uh, Both my co-founders, while they don't have financial services experience, but they have very strong experience building scalable products. One of
Okay.
them has worked with two companies, built products for them at very early stage, and both companies have gone on to become unicorns. And the other one worked for Google for a period of 9 years and
Okay.
was leading engineering for Google Docs and Google Spreadsheets.
I see.
So a lot of work they have done for scalable products. So one thing was very clear. I'll be a business guy. My one of my co-founders, Ankit, will be a product guy, and the third one, Javed, he'll be an engineering guy. So the moment we divided our responsibilities from a competency standpoint, I think we were very clear that who calls shots when it comes to that area. While
Hmm.
we can all
Okay.
have our own viewpoints, and we can all give our own suggestions, but when it comes to that area of expertise, somebody has to call shots. It cannot always be kind of a democratic setup. right? It has to be a more assertive setup where somebody has to hear everybody else and say, guys, I think I've heard all the points, but this is what I think we should do, right? So that is something that we need to do. So you have to give that ownership to people. And what I have done for one level below us is that we identify a 0 to 1 person, and that may sometimes be the same as a 1 to 100 and sometimes be different than a 1 to 100, right?
That's a
Because
great
these
point.
are two different skills. And trust me, Jim,
Yeah.
that's actually, a lot of people might disagree that you need different people for 0 to 1 and 1 to 100, but I have seen a lot of cases where there are people who are exceptionally good when it comes to building a company from 0 to 1, the first 2 months, the first few years, and they'll do really well. But the moment this company starts scaling and there is more chaos and there is more activity, then you need a different skill set. And you will probably need another person to come in. And this person is still relevant. The 0 to 1 guy can be put to something else which you are starting to do, and he can do 0 to 1 of that new product and your new feature or something else in the company. He's not irrelevant, but
Sure.
he is a 0 to 1 guy. So I think that kind of delegation becomes very challenging sometimes, because how do you tell this guy that, hey, I respect what you've done and I value what you've done for us in the last 6 months, but now I want you to do something else because this is now something that somebody else is going to take over.
Yeah. Let me ask you this. What do you do when you are that guy? Right? Like, so do you apply this to founders? I mean, is it a matter of upskilling? Like, I thought about this, because it's like, I've heard different opinions. It's like, no, you get it started, then you hire the big guns to run it, to scale it or whatever. And the other opposing thought is, no, you just hire coaches, you learn, you get better, you get experience at this different level. Because it's like our team has, we're a team of 25. Like, that's fairly large in my mind, but we have competitors that are teams of hundreds or thousands. I don't know the first thing at this point about running a company with thousands of people.
Yeah.
So do you see my points? Like, do I learn or do I just hire?
That's a very good question. In fact, this is something I discussed with our investors very recently. And I actually told them that, hey, the day we believe that we have reached a level where I feel that the company needs a better CEO, because I haven't, let's say, so I've had no experience of leading companies or building companies which are, let's say, 500 employees or more, or 1,000 plus people or more, right? I've built companies which are 10 odd people. I've built companies which are 50 to 100 people. But as you said, I've not done it in the past. But does that mean that I can't do it? I think that's the big question that everybody needs to answer. So I hope I'm not that guy right now. But if I'm that guy, and if, let's say, as a company, we decide that I'm probably not the right person to do it, I'll be happy to step aside, let somebody else come in and take that responsibility. And I'll find something else for myself within the company that I can focus on, so that I can drive the growth and the future. But to solve for that, I think we have to constantly do a lot more in terms of our personal development. And that's where I think founders sometimes kind of ignore that part, because they're so busy doing things which are completely having the company at the core, that they miss their personal development. And it's not their personal development from just career standpoint. I think there is health, there is mental space, everything else. So I think that is a very important piece. I haven't done that so far, so can't really comment. But that's important, I think. And
okay, so what do you know that you should do that you're not yet doing?
I think what somebody should be doing is talking to their team and talking to people. I think that's a very, very underrated skill uh, in the startup ecosystem. founders, when companies start becoming bigger, they start taking too many responsibilities, and there is so much to do. Especially founders who are CEOs, they're constantly either raising money, or they're constantly talking to investors, they're constantly talking to stakeholders, but they're not talking to customers. They're not talking to their team members. Suddenly they become less approachable. And the day they become less approachable, they don't understand what's happening on the ground. See, you build a company from ground up, right? The moment you reach that first level, or one level up, right? Now you have to build from 1 to 100, but it'll the the foundation will still come from the ground. So you will
Right.
have to go back down, get inputs, and then understand how you will build 10 more pillars so that this company becomes 10x, and then 20 more pillars so that this company becomes 20x. So I think that's something that needs to be done, that you have to constantly keep going to the customer to understand, hey, what do you need next? What can I do to make this twice as more valuable to you and to the teams, right? The first 20 people will tell you what you are doing right, what you're doing wrong. You take that input, you build, and then the next 20 people will tell you exactly what's happening. I think that's probably something that needs to be done. And upskilling, I don't know. I think upskilling is important, but when you are running a business, it's more about knowing what's in the game rather than what's outside your game. So I think that's where probably, yeah, talking to your internal stakeholders is more important than the outside world. But yeah,
Would you say that wisdom and discernment is undervalued among founders? And what I mean is, like, every day there's an endless amount of things for us to do. Like, we'll never get on top of all of those things. So every day that I walk into my office and that you walk into yours, we have to decide what are the most important things that I can or should do today in competition with all of the things. So in my mind, that comes down to wisdom and discernment, just making wise decisions. How do you think about those things and prioritize your day?
Yeah, and I think that becomes critical, right? You would also have experienced many a times that you walk in on a particular day, you know you have 20 things to be done. You also know that you will end up doing 10 of these, which are not so essential, but you will be doing those 10 because you just want to get them off your plate, right?
Yeah.
While the other 10 are probably more critical to your business, and these 10 can be done by somebody else, right? I think that's where that prioritization, delegation, that wisdom is, it's grossly underrated.
Yeah. And the rabbit hole goes pretty deep, because then it comes to trust, right? Like, not feeling like, oh, I'm the smartest guy in the room. It's like, I've heard the saying, I wish I could attribute it properly, but that you're in the wrong room if you're the smartest guy in the room, right? Like, you should have people that are much more competent. But like, there is a level of trust that has to be extended if you're to really be able to focus on the highest and best use of your time. You have to trust your team, and that can be hard for a lot of folks.
Yeah, and I would probably like to ask you here, Jim, what has been your experience of what you just mentioned, of building that trust which is mutual in your team? How do you go about it? I'm kind of trying.
Anubhav, I'm not ready to answer questions yet.
Turning the table here.
It's, for me, it's a constant maturing process, and I am regularly embarrassed when I think of my younger self not that I've got this figured out, but when I think about the way I used to do things. I'll give you an example. One of my early businesses, I was a partner on a business called Wet Shave Club, which is a subscription box business, and very small. And my wife and I and my kids were packaging up these shaving boxes in our garage, and I was just ridiculously specific on how I wanted the tape. And my wife was helping me. At some point, she's like, Jim, I'm done with this. Look, these are not going to be perfect. They're going to get shuffled around in the shipping process. It doesn't matter if the tape is half an inch here. Stop. Like, I'm a human being. I have my own mental faculty. I can think. And I'm embarrassed by that. But it's like, thankfully I'm not that guy anymore. But I think back to times like that, and I think, golly, and that it prevented me from moving quickly. It prevented me from making good traction because I could only move at the pace of me. Now we have a team of roughly 25, and each person on our team is highly competent, trustworthy. And like David, my partner, and I decided, like, when we started this business, we thought, you know what? We're not going to use screen recording software. We're going to extend trust as a default. Because I think in any relationship, you can start like, okay, I'm either going to extend trust to you, it's yours to lose, or I'm not, and it's yours to gain. Well, if we extend trust as a default and then it's theirs to lose, we can move much faster. And then we have the rare occasion where someone doesn't measure up to that. They break that trust and we have to let them go after a time. But that allows us to move quicker. And I've realized, dang, like, I'm not nearly as good as I thought I was. Like, a lot of that was just pride. It's like when I see the performance of my team, I feel like a proud dad. It's like they just are awesome. And I feel so proud of them. It's like, why am I trying to do all these things when I have such an incredibly competent team? So I don't know. It's a work in progress, but that's where I try to get my mind.
Yeah. And I think you brought a very interesting point there, Jim, in terms of, when it comes to building trust, it's about speed, right? I read it somewhere that, if there are two people, one of them takes real quick decisions and moves really quickly, right? And let's say there are 100 things that they do. And then there is one person who probably takes a bit more time, discusses, gets more opinion, and takes decision on the same 100 things. It's possible that the first one may falter in one or two out of those 100, but the speed with which they have moved on the remaining 98 will actually outscore the other guy, right? Because of that speed, you've just outsmarted everybody. So I think for me as well, this is a learning that speed is super critical. You need to move fast, whether it's letting go of something, whether it's embracing something. Every decision should be quick enough. I mean, you need to weigh in your options. It should not be rash, but it needs to be quick. And I think that's very important, especially for a founder. And in today's times, when there is so much competition, there is somebody else doing it and thinking in the same way like you are doing it. You need to be one step faster.
Yeah, absolutely. I'm curious. I think we're often the most critical of ourselves more than other people. I'm curious, how often when you get through your day, do you feel a sense of accomplishment in what you did that day?
Okay, as a founder, it does happen. It does not happen every day, but it does happen sometimes. I'll tell you. Both our founders, we were discussing this simple instance. So when we started, we had raised a very small amount of capital, Jim. So we get our most trusted people on board. The first 10 people who came in Rupify were all people we had worked with in the past. Right?
Okay.
Nobody we did not know from our past experience. Everybody we had some relationship. And all of them, we just asked them once that, hey, would you like to join us? We are starting a new company. And in one breath, we got a reply that, yes, we want to come in. And we told them that, hey, we don't have too much capital. So we will not be able to give you a raise. We will not be able to pay you so much. And a lot of people came with a reduction in their pay compared to their previous job, right? So there was definitely that trust that we built. When we raised our next round of capital recently, we told some of them that, hey, now we are in a better position. So we would like to, offer the raise that you deserve, get you to market compensation. And the day we were announcing those corrections and revisions to the compensations, people actually, came back and told us how much it meant for them. And even if it had not happened, they would have still continued to work with us because they're working not for money, they're working because of that relationship that they had. I think that's an achievement at the end of the day. On those days, you go back to bed feeling that, hey, we've built something, we've had something, we've created impact to people's lives. And I think those are days where you feel happy about why you are doing what you're doing.
Yeah. I know it's kind of icky to talk about, but I think for most founders, probably every founder, if they're honest with themselves, there's that weight of responsibility for your team. We know there's a statistically high percentage chance of failure. And, there's that weight of like, I know the whole business isn't on your shoulders, or even, the three co-founders, but there's that weight of responsibility to say that there are people that are counting on me, that are counting on us to perform and to do well for their very livelihood. And yet I know there's a lot of factors outside of your control. I mean, I listened to a podcast one time. I wish I could remember whose show it was on, but it was talking about how VC investors had worked with founders who had failures in their past because those failures didn't define them. It was just a situation. Like they did a good job. It was just a situation. But like, how do you process that weight and not let that overly bog you down, but at the same time, not ignore that weight of responsibility?
Yeah, no, I think that weight is there to be carried every day, right? And I think that's what drives you. That's what drives you because that's where the whole challenge and the whole adrenaline of running a company comes in. But at the same time, I think it's a very calculated risk that founders take. While everybody says, so I've done this twice in my life where I have left a very well-paying job and then started a company, right? And my parents are, as I said, I come from a family where there have been, so it's a first generation entrepreneurship that they have seen. So my parents have not seen anything like that in before. They were like, this guy is crazy. He's gone out of his mind, right? What in the hell were you thinking that by making this decision? So I think I always told them that, hey, there is a calculated risk I'm taking. It's not infinite risk, right? There's never an infinite risk. I think that's what founders need to understand first themselves, that how much risk are they taking? Is it infinite? If it's infinite and you don't know the future, you don't know the market, you are just jumping into it, then I think it's a sign of trouble. But all founders, I think I can say that with quite a lot of conviction, that all founders take a very calculated risk, and you would agree to that, being in a similar position, that we all know, we constantly do that calculation. How much money is in the bank? It's payroll day. How much will I be left with at the end of the month? What is my runway? What do I need to do to make sure that we have that visibility of the next 6 months, 12 months? And what I do with that responsibility on my shoulder and my co-founders' shoulders, we constantly tell the team that, hey, this is where we are. So when COVID struck, I think a lot of companies faced this dilemma of what to do and how to go about it. And we just started. So we started in January 2020. It had been just 2 months. We had got people with a reduction in pay to come on board, and COVID happened.
Oh, man.
What we told people is that, hey, guys, whatever may happen, next 12 months, everything is secure, right? You don't have to worry about anything. We have raised a small amount of capital, but there is a calculated risk we have taken. We know we are going nowhere for the next 12 months. We are absolutely there with you. We know the next 12 months, we have enough money in the bank, we have enough capital. But then what we did is, as lockdowns extended, as COVID, the first wave took some time to come down in India, we went to our investors and raised a bridge round, right? And told them that, hey, we know we have 12 months of runway, but we don't know the uncertainty around us because of COVID and all. So can we add another 6 months of runway, right? let's give that comfort to the team. Let's tell them that, hey, there is 6 more months that we can put our head down and work. And that's what drove them to do the best. I mean, you have to get the maximum out of people, and that you can only get if you give them something, right? If you don't give and only ask, that's not going to work.
Sure. Yeah, that makes sense. That's so, yeah, that's well said. I think too, there's not just an endless amount of security in jobs, right? Like there's risk there as well. And it's interesting. My 10-year-old daughter, I was picking her from school the other day and driving her home, and she said, "Dad, can you get fired from your job?" Because I did something very similar. I left a secure job by all accounts, had great colleagues, and enjoyed the work I was doing. It was a good paying job to start Xfusion, our business now. It's like, she asked me that. I thought for a second. I'm like, no, sweetie, I really can't be fired. Now the more complicated answer is, well, kind of. I mean, like, we lose all of our clients, and it's kind of, but no. But it was a paradigm shifting thought for me. It's like, no, it's not. We'd have to lose this, and then we'd have to lose that, and then this, and so, like, I don't know. Weirdly, in the car that day, I felt kind of more secure because I thought, not that I would expect my boss to do this, but if he walked in one day and wanted to fire me, he could do that. It's like,
Exactly. So there is never an infinite stability, but there is never an infinite risk, right?
That's good.
It's all calculated, right? The probability of you walking into a job and your boss firing you, it's not zero, but it's still very low. I mean, unless you do something.
Yeah, no kidding. Anubhav, this has been an amazing conversation. I know it's good when I look at the clock and it's like, dang, we've already been here almost an hour, and it feels like 5 minutes. Let's end. We have a couple of viewer questions. I want to ask the second one. They're both from Carlos, because I think it's a good way to finish up. And he says, let's say if you had to start over, what would you do differently and why?
All right. So I've already started over twice. I think one thing that I have done differently, I'll talk about that. So in my previous startup, we were three co-founders there as well. We had overlapping skills. So a lot of our skill sets, a lot of what we had done in the past was on similar lines.
Okay.
What that led to is whenever we had a tough question, we were all thinking in the same way. So there were never a different opinion that came on the whiteboard. And we all agreed on everything, which is very bad for the company.
Yeah,
right.
Makes sense.
If you always agree with each other, then you don't need 3 founders because it's just one person whose
good point.
Whose point we are taking. So my lesson from this time when I started it again was that to find people who added a complementary skill, something who brings something else to the table. So that's something I did when I started this time. Something that I'll again probably would have learned from this time and do it if I have to start over again. I think one needs to prioritize on speed over anything else. If I had to do it all over again, I would probably build a culture where everything is driven by your pace of execution and nothing else. I mean, if I have to define the company's, values, I'll put speed and pace of execution right at the top. So that's what I would do. Not that we don't have that today, but yeah, we kind of miss it sometimes.
That's understandable.
But yeah.
That's good stuff. Well, Anubhav, you're absolutely completely full of wisdom and experience and just have an amazing amount to share. So I appreciate your graciousness and spending time with us today.
It was a pleasure, Jim. I think loved the conversation.
Awesome.
Didn't realize it's almost midnight here.
You gotta get to sleep, man. Do you have an early morning appointment?
No, I don't have. But I'm
sleep in a little bit.
Normally an early riser. I normally wake up early.
Well, thank you for staying up so late. I really appreciate it.
It was a pleasure.
What's the best way for founders to get in touch with you or potential clients to get in touch with you?
So I'm mostly active on LinkedIn.
Okay.
As I said, I'm quite excited about the power that LinkedIn drives, especially for us. So yeah, anybody can reach out on LinkedIn. I'm quite active there.
Perfect.
You can just find me, search for Rupify and my name, and it will pop up.
And we'll link that as well
Yeah, sure.
in the show notes section. So
Sure.
great. Well, thanks for your time. Hope you get some rest.
Thanks, Jim, and good luck to you guys as well.
Thank you. Cheers.
Thanks. Cheers. Bye.